Yeah, so obviously yesterday was a pretty tough day for resources. We saw a pretty broad sell-off across the space, but that was especially hard felt on BHP, our largest miner, which was down just over 9% yesterday, underperforming its peer Rio Tinto, which was down just over 6%. The reason why it was sold off particularly aggressively was the announcement that a Brazilian prosecutor was launching civil proceedings against the Samarco joint venture and Vale and BHP as part of that, seeking damages of roughly US $44 billion. Now, that's a really big number. It's quite scary, but when you start to bore into the detail, it does become a little bit absurd when you start to see what's behind it. They're basing that number of damages purely on a comparable with the BP oil spill in the Gulf of Mexico a few years ago, saying that it's the same extent of damage, but that's, in our view, that's clearly absurd. There's no comparable comparisons between the two events, and really that number is multiple times what it actually should be, is our suspicion. So we do also note with interest that one of the last civil proceedings this same prosecution's office did take against a multinational resource company was against Chevron and some of its partners in 2011 when there was an oil spill off the coast of Rio de Janeiro, where they initially launched a lawsuit of $11 billion of damages they were seeking, and that ultimately got settled for just $42 million. So it's our expectation that that this process may be something similar, where it's going to be a bit of a process to work through, but by no means do we expect damages of $44 billion to be a realistic number by any quantum. So it's also hard to imagine how this proceedings will actually go ahead in parallel to an agreement that BHP and its partners are already formed with the federal government in Brazil and the two affected state governments over compensation and remediation for the dam failure event that happened last November. So that's already been put in place before this independent proceedings yesterday were launched, and only needs court approval just to be signed off on. So it's very hard to see how those two different compensation events are going to actually run or coincide with each other. So we are awaiting greater clarity. In the end, even though it's not a positive announcement, we don't at this stage see any real material implications for it. We do maintain our preference for BHP. We do think it's good long-term value. But just thinking with this hanging over it, maybe a little bit of a drag on sentiment, as well as coupled with a bit of a sell in May, go away type feel that the market has at the moment, which may be particularly sharp for resources. So given the speed of the rally that we've had in resources and the fact that companies like BHP have moved from $14 to $21 so quickly, it does make them susceptible to a little bit of a short, sharp sell-off, which we think may be unfolding now. Instead of being a cause for concern, we actually see it as an opportunity for those who missed the low point in resources to start to dip their toe back into the sector. In terms of the sector turnaround, we do see it as being intact and quite healthy in building its fundamentals. We're now past the downgrade cycle for resources, where they're being steadily, forward earnings expectations across the market were steadily being eroded. That's now turned into an upgrade cycle. That's a strong positive. In addition to commodity prices, that big surge in commodity prices we've had so far this year, even if that doesn't hold together, it's been enough to drag up the average for the half, which is a strong positive to earnings expectations for the sector, just at a time where some of the other sectors are coming under a bit of profitability pressure. Really looking beyond that, at the core fundamental of a lot of these global miners as well, like BHP, is the fact that they're also past their major capex spend cycle. So the amount of capital budget they're spending each year on their assets has fallen off a cliff. And even without a turnaround in commodity prices, they're already facing positive free cash flow in FY16 of $4 to $5 billion US dollars, which is significant. If in FY17, if you couple that together with even a marginal increase in some of these major commodities, the upside leverage to further free cash flow could be quite substantial. So that's what we see as the major positive upside risk for the sector, and really starting to see that recovery in the sector start to gain legs. So just to recap, if you do see some volatility coming through in May with the sector and the broader market getting a little bit of a sell in May type cold, I would see that as an opportunity to dip your toe into the sector at achievable prices. So with BHP, we do have an ad recommendation with a $26.80 price target. But on the current volatility, if you get any chance to accumulate below $17, I would see that as a great opportunity.